Jeff has actually brought a chart. He is trading the S&P 500, and this chart, you say, will point to a mega rally this year?
I think it points to the possibility of higher levels. I don't know.
Okay.
Slightly different than a mega rally.
Well, it's a rally of some sort.
It says party like it's 1985. I don't know if the party's going to be as fun as 1985, but probably worth going to. But I think it speaks to how important the Fed is to multiples, what investors are willing to pay for every dollar of earnings, even in the face of an earnings deceleration. You saw it in the mid-90s. This is a better example. So in 1984, you had great earnings growth, over 20%, but you had a Fed that was hiking rates in the face of that, so you had massive multiple compression, not unlike what we saw in 2018. You fast forward to 1985, you saw a big earnings deceleration, actually negative earnings growth in 85, which is probably more dramatic than what we'll see this year. But then you had a Fed back off. And yes, the Fed actually started to cut rates in the mid-80s. So different than what we're going through now. But multiples reaccelerated dramatically and the market was up over 25%. Again, probably shouldn't expect over 25% as your base case for 19, but it is a very similar pattern in terms of earnings deceleration that could be met with higher multiples because the Fed's no longer tightening policy.
The key that you just made was the Fed. What's different about this time than last time was the Fed was cutting rates. We're not
starting mid that year.
Right. So
although Fed funds futures prices in a cut in this back half of the year at this point.
Fed fund futures are positive now in real terms.
Look, if the Fed starts cutting rates, we've got problems.
2.4% minus CPI, basically, you still have a real rate of 0.5%. So they're not easy right now.
But why do you say there's problems? Because according to that chart, there weren't problems that year, at least for stocks.
I'm saying if the Federal Reserve is cutting rates in 2019, I think the market has big problems,
well,
which is not what you're saying.
No, but the bad scenario is that if the Fed not hiking makes people think that the economy is actually worse than they already thought it was. I think the market's probably smart enough to be able to come to their own conclusion as to whether we're going into a recession or not. But I do think the fact that if the Fed does not hike at all this year, you could see multiples at least maintain the turn that we've already seen higher, if not go higher.